calefacción y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, we're talking a couple of the things that are making waves in the markets and dynamics going forward. Still with us, Ron Temple, Lazard Asset Management, co-head of multi-asset and head of U.S. equity. Ron, how exactly do you see this debt dilemma playing out over the next 12 to 18 months?
Well, I do worry that exiting this crisis, we're going to see balance sheets that are more heavily burdened by debt, whether it be sovereign balance sheets across globally in developed markets and emerging markets. Then we're also going to see corporates with more debt and sadly, households with more debt. But counterintuitively, one of the things I'm hoping we see after we get through the fourth quarter and the elections in the U.S. is a pivot in terms of policy. I think what would be very positive for the U.S. economy would be for Washington to recognize that we've underinvested for decades in our public infrastructure, in roads, bridges, sewage systems, water systems, and broadband. And if anything, this pandemic should have brought home how important it is to have fast, reliable broadband for the economy to work. So what I would love to see is a massive infrastructure program to try to raise productivity growth rates. This historically was a very bipartisan topic, by the way, in the U.S. In terms of if you could raise productivity growth, you raise income growth for the economy as a whole over the future, and this would be very positive. And we've already seen, by the way, a positive step in that regard with the EU Recovery Fund. So that's where I'm hopeful. So it's kind of ironic to say I'm worried about so much debt, but I'm hoping we actually have more of it next year. The key being that we need to use that debt to fund productivity-enhancing infrastructure.
Yeah, I was going to ask you, Ron, about also the Green Recovery Fund that we saw here in Europe. Does it put Europe on a better footing compared to other parts of the world?
Yeah, I have to say the EU Recovery Fund was a pretty pivotal trigger for me for the first time in a long time to say, I think I see something structurally positive happening in Europe. And I do think Europe actually has the chance to take the lead in really important technology from the U.S. as it relates to green technology. Europe has basically led in many ways in terms of solar power and other renewable energy sources because of government involvement. And I think that is a positive for Europe. And the U.S. shouldn't miss this moment in time. We can create a tremendous number of jobs in terms of weaning ourselves from fossil fuels and the climate change issues that we're all going to face. I think climate change is the existential issue of our lifetimes, and the U.S. needs to get up its game to be able to compete with Europe on this front. But I do think right now Europe is in the lead.
Ron, what do you think of ESG? We've got a lot of banks that have committed to ESG. You're on the other side of it, taking in ESG research. Is it a value?
I think ESG is a core part of analyzing equities. It's interesting, by the way, if you go back, say, 30 years ago, we had socially responsible investing, and that was kind of the domains of, say, religious groups, typically thought of as the nuns and orphans who didn't want to own certain sin stocks. And it was more about restricting choices. ESG has really evolved. This is about not saying we're not going to own companies because they're evil or because they're on a bad list. Instead, to me, what ESG is all about is identifying which issues for a company are material to their future financial returns. So to me, this is part of a financial analysis. So for example, if climate change is going to be this existential challenge, which I think it is, how does climate change affect the profitability of a company in the future? Does it create opportunities because their products do better in a world that's adapting or mitigating climate change? Or does it create hazards? And then folding that into your evaluation and saying, okay, my target price actually is a bit different than I would have thought without considering these factors. So I do think ESG is critically important to analyzing stocks, and we're working to try to integrate ESG throughout our analysis as a firm. And I also believe, by the way, the next step beyond that is sustainability, and trying to understand which companies are aligning themselves with a more sustainable future in terms of how they manage not only their financial capital, but also their human and natural capital. So yes, that's a long answer to say that is very important. But I think what's also important is not just relying on external ESG ratings. You know, if you look at bond ratings, there's an 80 to 90% correlation between S&P and Moody's. In ESG, it's more like a 30% correlation across the major providers.
Interesting.
You really have to understand materiality and context.
That's an important statistic. We'll do that next time with Ron Templeton. Ron Templeton of Lazard, they're in 30% correlation. That's a very low correlation where you can really add some research value. He is again with Lazard. Futures negative 60 early, now negative 52. That's an ugly number with a VIX out 4 points. Dow futures negative 525. Really right on the edge of a correction where I don't believe we're there yet, 10% down from the peak. EN 104.10 is one of those statistics. Gold, I haven't mentioned. Gold down $25, $19.37 the ounce. The senator from Tennessee later this afternoon. This is Bloomberg.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg First Word News. China is ratcheting up tensions in the Taiwan Strait, hoping to deter Taipei from deeper ties with the U.S. In a series of military exercises, China repeatedly breached the median line separating the two countries. Beijing regards the island as part of its territory, even though it's been ruled separately for more than 70 years. India added another 87,000 coronavirus cases to its tally today. That pushes the country's total to nearly 5.5 million. India has the world's second largest COVID-19 outbreak behind the United States. The country says 3 vaccines are in different stages of clinical trials. A woman suspected of sending an envelope to the White House containing the poison ricin was arrested over the weekend. Officials say she was taken into custody at the U.S.-Canadian border whilst trying to enter the United States. Her name wasn't released, but officials say her arrest comes nearly a year after she was deported from the U.S. for engaging in criminal activity. The letter was intercepted last week before it reached the White House. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Fancy and Tom.
Ritika, thank you so much. Greatly appreciate it. We say good morning to all of you worldwide. Over the next number of days and indeed weeks, all of us will be looking at the heritage, the history of Ruth Bader Ginsburg, and of course the path forward. Let's listen to comments this weekend.
I think we're going to start the process extremely soon, and we'll have a nominee very soon. I could see most likely it would be a woman. Yeah, I think I can say that. It would be a woman. I would, if somebody were to ask me now, I would say that a woman would be in first place, yes. The choice of a woman, I would say, would certainly be appropriate.
The president is rushing to make some kind of a decision because November 10th is when the oral arguments begin on the Affordable Care Act. He doesn't want to crush the virus. He wants to crush the Affordable Care Act.
I believe we will. I think it is particularly important that the Senate take it up and confirm this nomination before the election.
Some voices there, and importantly, Senator Cruz considered to be on a list under consideration by the President of the United States. We have Bloomberg Advantage. We have Greg Storr of Bloomberg News and Kimberly Robinson, who do better than good. We have authorities like Noah Feldman at Bloomberg Opinion, and of course the wonderful Cass Sunstein. But none of them compare to the history of actually doing it, like one David Weston. You, of course, know him for Balance of Power, but what you may not know is a sterling academic ability out of the University of Michigan. They dragged him to Washington for the privilege of clerking for Powell, back when Powell really mattered, with a guy named Warren Burger. So we look back with David Weston right now. Extraordinary opportunity for you, David, to observe a young attorney from New York with a certain intensity. What was it like to see Ruth Bader Ginsburg in action?
Well, it was a great privilege, without a doubt, to clerk for Justice Powell. And she did have one of her 6 arguments before the Supreme Court. When I was there, I was in the chambers because I was assigned for Justice Powell to that case. And the case was one she was going to win anyway, because we have to remember, she changed the entire legal world. If she'd never been in the Supreme Court, she would have changed the world, because it was the first time, it's hard to imagine, that she persuaded the court to say the Constitution does bring some equality to men and women.
I want you to give us some of the tension there. Whizzer White of Colorado was the one giving her grief that day in court. There were many other Whizzer Whites, weren't there?
There were, in fact. And it's ironic, of course, he was giving her a tough time in that argument. Of course, she succeeded him ultimately. She took his seat at the bench. But the question was, should women be excused from grand jury service? And it was thought that that was doing a favor for women. Her whole theme for her body of work was, don't do us any favors. You're not helping us at all. And Whizzer White pressed her, said, if women and men are really equal, they're interchangeable, who cares? And she had to answer that question.
Here's my money question, and I go back to Eisenhower and the study there with Cardinal Spellman of he needed the Catholic vote, and I believe it was 1956. 1986, and that's when Brennan of New Jersey was selected as well. Can we have the surprise injustices today where they're picked for a certain view, whether a professor from Notre Dame or the daughter of a Cuban exiles? Can we know with certitude how they're going to act now, or are we so polarized that it's going to be different than it was with Brennan and others?
I'll give you one perhaps example, Chief Justice Roberts. Right now, there are a fair number of Republicans who think he's a surprise. He's had some votes that were clearly a surprise.
I was going to ask you earlier this morning, but Weston gets up later than me, folks. I don't know what that's about. But I was going to ask you, we have a listing of 5 conservatives and 3 liberals, and I would suggest Roberts isn't on that list of conservatives.
No,
is he?
I think it's very hard. I think actually Chief Justice Roberts is more committed to the institution as an institution. And a lot of his votes can be explained by what he thinks is good for the Supreme Court as it functions in this constitutional democracy.
David, good morning from London. For all of our international viewers, and I know, all of the papers also covered what happened at the weekend, but once you become a Supreme Court justice, are you apolitical?
Well, you can never be apolitical if you're a human being, right? We're a herd mentality. But certainly people do not overtly talk about their politics. I mean, they can't leave behind, I don't think we want them to leave behind who they are, what their experiences are. But I would say one thing, as we think about the influence of Ruth Bader Ginsburg, it strikes me that Donald J. Trump, the President of the United States, would not be out there, as he was on the weekend, saying it has to be a woman, but for Ruth Bader Ginsburg. I mean, even President Trump is saying it's got to be a woman. There was a time that would not have been relevant.
I mean, if you look at past appointments, does President Trump actually, he'll try and replace her very quickly, but is there enough time to get it done?
Historically, no. I mean, if you look at the average, it's about 70 days or so. There's not nearly enough time. But I think at this point in Washington, in the middle of an election, I think all bets are off. We don't know what the rules are.
Maybe on your tour with Justice Powell, there was Bellotti Baird, this out of Massachusetts.
Good for you. That was our term. That's right.
This is a really, really important case as well. There's a belief now that the gentle lady from Notre Dame will use precedent on Roe v. Wade. Do you buy the idea that even a conservative justice looks at precedent, or is the evangelical right supporting the President of the United States, suggesting he needs to do something so the court will act?
Well, the Seventh Circuit Court of Appeals judge that you're talking about really, we believe, is really very hostile to abortion. That's the question. But I have always thought, I do not think, even conservatives, if they're smart, want to overturn Roe against Wade. That's not the move to make. The move to make is to whittle it away, to allow the states to have more and more regulation and do it incrementally, rather than an overturn would just marshal so much opposition instantaneously across the country. I don't think that's the smart way to go.
We're in the reporting business. I don't want your opinion on this, but what would you expect Vice President Biden to do in the coming days?
Well, there's been some reporting on this already. A challenge for Vice President Biden is that he was trying to make this all about the coronavirus and President Trump's dealing with the coronavirus. Now he's off on the Supreme Court. And the question is, can he wrap those two together? And the way may be the Affordable Care Act. Because you have to remember, there is a challenge before the Supreme Court of the United States
right after the election.
Exactly right. And so he can bring it back and say, wait, in a world of the pandemic, do you really want to take away the Affordable Care Act? And that's what this vote really means to you.
Most important question of the day. What's the #1 thing mere mortals like me get wrong about the Supreme Court?
Oh, most of the work of the Supreme Court is actually fairly mechanical, just dealing with the day-to-day of the legal judiciary.
Boring stuff at clerks.
Well, exactly right. A lot of tedious. I mean, we all focus on the big abortion cases, things like that. A lot of it is just like a statute of limitations and how do you interpret it, and what about retroactive application of decisions.
So you ran to the calm of media, right?
Exactly.
David Weston, thank you so much. We'll continue this dialogue not only with Balance of Power at 12 noon, but that was a little inside joke there, folks. We'll continue forward in the coming weeks with this, with a valued perspective of Mr. Weston. Coming up, the valued perspective on WeChat. Michael Wolf, timely. Futures -49, Dow futures -507, and markets truly in turmoil. Stay with us. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Extraordinary news flow, including out of the United Kingdom. Francine, there's actual meetings going on right now in the United Kingdom. Is this a day where they decide on lockdown?
Well, it could be a day where they decide on some kind of restrictions, Tom. So there has been a lot of pushback on not calling it lockdown because schools would remain open. So the idea is that maybe you have a curfew, bars close at 10 p.m. to stop the transmission in certain parts, whilst not keeping children at home. So, it wouldn't be lockdown as far as we understand it, like we saw in April, May.
Oh, and the markets again as well. Futures negative 51. Yields come in here in the last 5 minutes. The 10-year yield to 4 digits, 0.6577. Right now, with this extraordinary news flow on China, and particularly on the structure of our technological companies, Michael Wolff joins us to say he's Activate co-founder and CEO. Describes his commitment to private equity into investment in innovation and technology. Michael, you're the right guy to speak to right now. WeChat is an app. A judge over the weekend said WeChat is a business, and you've got to show some national security proof to eliminate it. What are your thoughts on WeChat as a business?
WeChat is used by over 1.2 billion people, mainly in China. And people don't understand that in China, WeChat is almost like the internet itself, because people use WeChat for payments. They use it for their actually apps inside of WeChat. They use it to talk, for voice. They use it for commerce. And so by banning WeChat, essentially in the U.S., you're impacting not only the 20 million or so people in the U.S. who use it, mainly people have to communicate with China, but you're actually hurting American companies' chances of doing business in China, given the fact that so much commerce takes place today on WeChat itself.
Within this is the legal discussion. I mean, this is what you're expert at, is melding in investment into all those documents you have to review on any transaction. What is WeChat's voice in America? Who represents WeChat to the Trump administration?
Well, I mean, clearly there's been legal representation in last week, and the judge delayed the banning of WeChat as a First Amendment issue. I think the broader issue is what WeChat's, the recent moves against WeChat, as well as what we saw in terms of TikTok. And the issue is that all we're going to do is throw flames against, more gas on the flames of this Chinese techno-nationalism, where we end up with the U.S. internet and the Chinese internet and the internet and the rest of the world being very separate. And so the Chinese aren't going to let this happen so easily. And we should expect that they're going to do the same thing to us. They're going to say that American companies that are based in China should either be banned or should be owned by local companies.
Michael, do you see, whatever happens in November with the U.S. election, do you see just much more antagonizing relationships between the U.S. and China when it comes to technology?
I mean, there's a lot there's a lot of substantial issues about China. There are these issues about security. There are these issues about intellectual property, but they need to be negotiated. China views companies like WeChat and TikTok and Huawei as what they call their technology champions. And so by trying to put them out of business out of the United States, we're really, our negotiating position isn't the same as in the future, where we're able to find ways in which there's some real regulatory regimes that get followed. And so I don't think whichever administration is in place, there's not going to be those issues are going to remain, but at the same time, there's just going to be a different approach on how to deal with them.
Okay, was TikTok and the solution found there with Oracle an elegant way to find a solution that is actually acceptable to both sides?
I think that the administration failed in its goal of making TikTok a company that was owned by U.S. companies. In fact, what we end up with is really sort of an unclear ownership that we're not sure how much anyone's going to invest. I mean, ostensibly, between Oracle and Walmart, they end up owning 20% of the company, but that's really just a right for them to invest in the future. And we end up with Oracle owning about 12.5% and Walmart owning 7.5%. And so, yes, the company, the U.S. TikTok is going to be managed here, but it really doesn't change the nature of the overall ownership. We're in a position today where TikTok is going to continue to be important. Almost 100 million people use it in the U.S. And what's most valuable in TikTok, which didn't become part of this U.S. deal, is the artificial intelligence, is the algorithm that surfaces TikTok's videos to its users. The data is important, but the data is still going to be integral to the operation of how TikTok not only surfaces those videos, but gets you to stay in front of your phone, continuing to watch more and more TikTok videos.
Michael, but do you see China retaliating? Actually, if they say that this solution could be palatable, but do you see them retaliating against U.S. tech stocks in the future?
I think it's going to be less against tech stocks, and the retaliation is going to be more about trying to much more overt ways of limiting American companies' presence in China. This is part of a trend that's very troubling from the U.S. perspective. Banning Huawei, stopping Broadcom from making its acquisition of Qualcomm. It ends up, all it ends up doing is separating off from the U.S. from China, when from the internet perspective and from technology's perspective, this is one global ecosystem and we need to be part of it.
All right, thank you so much for joining us. Michael J. Wolf there, Activate co-founder and chief executive officer. Now, up next, we track COVID-19 with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is done based on a series of scientific evidence in that community that the rate of infection is way down. The conditions are there that the CDC would require, that the local government requires, and then we have additional conditions on top of it in terms of what's going on, everything from infection rates to hospital capacity to things that we measure to make sure that we're comfortable that we can handle it. And knock on wood, we hope that it's been going well.
Well, that was the Bank of America Chairman and Chief Executive Brian Moynihan speaking exclusively to Bloomberg's David Weston ahead of the Equality Summit. Now, our coverage starts on the Equality Summit this Wednesday, 7 a.m. in New York. That's 12 p.m. in London. Now, joining us for more on the virus is Dr. Joshua Sharfstein. He's Johns Hopkins Vice Dean for Public Health Practice at the Bloomberg School of Public Health. Josh, that was a little bit of a tough turn, but actually, we track the virus, we track it every day, and it does seem that we're looking at possible restrictions, extra restrictions here in London because a number of cases are really soaring in the UK. Overall, Dr. Sharfstein, is there a concern that, if we look at the R number, and once the R number is above 1.5 or even 1.7, that things get out of control? What is the magic number which should make people really worry?
Well, I think you're right, because what that means is there's exponential growth and the curve is pretty steep. And within a few days, really, you can get to double the number of cases that you had before. And so you have to really do something to control the spread at that point before you really start to see it take over.
Joshua, when you look at some of the things that, we've been talking about, which is some of the vaccines or, these restrictions, whether they work or not, what do we understand about why more people catch it but less people end up in hospital? Is it just because it's laggard, or it's because it's a different type of the population that is catching the virus right now?
I think it's a combination of factors. One is certainly that we're finding the virus in more people who are at lower risk, so the rate of people getting very sick is lower. The other thing is that there's just a better understanding of the virus. So for people who do get sick, they can get oxygen faster, and if they go into the hospital, there's better treatment for them. So they're less likely to die. But it's still pretty deadly, and it's still a disease that everybody is sort of rolling the dice if they get it, because even younger people can get quite sick.
Talk to me a little bit about some of the vaccine trials. Why is it that some of the trials are paused in the U.S. but not here in the UK?
It's a great question. There's obviously concern about the adverse effects that were found, or the potential adverse effects, thinking about the transverse myelitis and the other neurological conditions that showed up in the trial. In the UK, they may feel comfortable moving forward. The US may still be asking for information. I think it would be great for both the regulators to be explaining what they're thinking. Otherwise, it can look confusing.
Joshua, if there's one thing that we're trying to understand, is that there's so much of a dispute about the timeline. I mean, does it really matter to keeping people healthy if we have it in December or the first quarter of 2021?
Well, we'd like a safe and effective vaccine as quick as we can get it. But of course, it's got to be safe and effective. I think that the election has sort of distorted the discussion of the timeline in the United States. But most people seem to think that the trials are on track to report key results later this fall. And then that would drive what would happen after that. I think we're in for a period where we're going to be hearing about multiple vaccines. We're going to be trying to set up a distribution system, which will be challenging for certain kinds of vaccines because of their requirements. And people are going to have a lot of questions. And, it's just really important for us to have a clear, consistent scientific voice guiding that. to inspire confidence in not just in the general public, but in the healthcare system, so that people can turn around and recommend it with full confidence to their patients.
Thank you so much, Joshua Sharfstein there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, it's been quite a day when it comes to market volatility, and it's been a clear risk-off mood. Global markets are tumbling today, so let's bring that board up for you. European stocks falling the most since July. Investors really worrying about tighter virus restrictions, and also a report detailing suspicious transaction at international banks. Treasuries rising, the dollar strengthening. This is Bloomberg.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The cybersecurity sector obviously is no secret that it's probably going to do very well in the next 5 to 10 years, say.
2020 has already surpassed previous years' funding in digital health in particular.
I personally prefer to buy businesses that make money, and if you can buy them that are unlevered, that just means they're even cheaper.
I'm not going to say that there's a bubble forming. I'm going to say that there is potential for one to form.
I think there's a lot of risk in the bond market right now for investors, a lot of complacency.
We've really moved into a new era. Monetary policy, the way we grew up with it, it doesn't work anymore.
Anybody who thinks that the China-US tensions are going away are simply wrong.
We're going to have to live with the impact of this virus perhaps for longer than we thought in May.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene with equity futures down 50 on the S&P, two things weighing on investors' minds: the division down in Washington, D.C., and the COVID risks across the continent in Europe.
Well, the new, John Farrow, and as you know, in the United Kingdom, where you're living at lockdown front and center, and then, of course, a judicial lockdown in Washington as well. One of the tea leaves, John, I'm looking at is strong yen, 104.04, really indicative of the correlated angst we're seeing right now.
One thing I'm seeing, Tom Keene, severe underperformance in the European equity market. Futures down 1.5% stateside. In Europe, the FTSE off by more than 3%. The equity benchmark in Frankfurt, Germany, the DAX off by 3.25%. And Europe also looking to Washington, Tom. Let me be clear about that. That's been the conversation through the morning here in London. What do the events over the weekend mean for policy down in D.C. and the three aspects to it? The path towards a fiscal agreement, much trickier now. The complexion of Congress and the Senate. There are some vulnerable Republicans that look a little bit more vulnerable if this is the path that McConnell and the president are going to take. And the third point as well, Tom, there was a huge worry on Wall Street about the period from November after the election going into the end of January. You'd have to say for market participants, they're probably a little bit more worried about that this morning.
And not just the 40 days away, 42 days, whatever, away to the election, John. I think really unspoken in all this is 8 days to a first presidential debate. And that is radically changed and of immense interest as we go to it.
And Lisa, a Federal Reserve seemingly for many held hostage by the next move down in Washington.
And that's really what we're all watching, is how much pressure is there going to be by policymakers that don't have control over fiscal policy on people who do have control over fiscal policy to do more and do it fast. 8 a.m., we're going to be hearing from Dallas Fed President Robert Kaplan. He's going to be speaking with Bloomberg Television's Michael McKee. Very interesting to see how much he links potential underperformance of equities and other assets to the lack of action in Washington. 8:40 a.m., the same discussion we're going to be having. ECB President Lagarde testifying to German and French lawmakers. How much pressure will she put on them to act more, to do more on the part of fiscal policy? And then at 3 p.m., the U.S. Senate is meeting. They're the ones that are going to decide on a possible successor to Ruth Bader Ginsburg of the Supreme Court. How much oxygen, John, does this take out of the room from the discussion about the economy? We will all be watching that very closely. A lot of analysts saying it doesn't look likely that we will get any deal passed given the ongoing split and how much more bifurcated the Republicans and Democrats are right now.
Well, Lisa, I can tell you it's taking some oxygen out of this equity market this morning. Equity futures down by 1.5%. And Lisa, I know you're on top of this as well. Here's the snapshot of the risk aversion in the bond market. Yields come in 4 basis points on a 10-year. On a 30-year, we come in 5 or 6 basis points. So that is a flatter curve, a stronger dollar, euro dollar down to 117.82. Tom, I know you're looking at that stronger Japanese yen. That stronger yen, the exception in G10 this morning. It's a stronger dollar, Tom, in the FX market.
Well, it's a stronger dollar, and what's interesting here is some of the idiosyncratic continues to move further. I mean, it's a tangential story, John, but you know I've been watching Turkish lira, and these are benchmarks at 7.40, 7.50, and this morning, lira, just as no other word, plunging. 7.60 rounded up, 7.61. These are some of the little things distorting into an S&P negative 53.
Let's get the conversation started, Tom.
Please.
On the market, on Bloomberg Radio and Bloomberg TV, we're joined by Julian Emmanuel, BTIG Chief Equity and Derivative Strategist. Julian, let's be clear. You came into this week already less constructive on this equity market. Is there anything to feel good about from your side this Monday morning?
Well, it's a little dicey. There's no question about it. I mean, you know, you just described the litany of issues facing the market, and what we're seeing is, you know, clearly, if you look at the currency markets alone, the classic risk-off behavior with a strong dollar and even stronger yen. The one ray of sunshine is, you know, obviously the last 3 days with regard to the passing of RBG and the contest with how they're going to fill the Supreme Court seat is it's taken the eye off the ball of the fact that stimulus, in our view, in Fed Chair Powell's view, is absolutely totally necessary to keep the economy moving forward in the fall. And we've seen this time and time again, whether it was the debt ceiling in 2011 or other governmental impasses, a weaker equity market tends to galvanize action. That's the one ray of hope.
Julian, John Templeton, the giant of value and courage. Sir John Templeton, shares are on sale. Why don't we feel that? I mean, I think Lisa and I and Jonathan, the only thing we can agree on this morning is shares are on sale. Isn't this an opportunity?
Well, here's the issue, and if you go back to March the 23rd, up 83% in the NASDAQ to the high on September the 2nd, 63% in the S&P 500 in virtually a straight line, while again, unemployment is still extremely elevated. Valuations, particularly in technology, are very elevated, and we have this economic uncertainty. And if you think about it again in the context of how quickly that move occurred, you could argue without any of these issues that the market was due a correction.
Julian, have we moved past the narrative of lower yields means higher stock prices?
Absolutely. Absolutely. Tina, in our view, is very much priced in. And, the conversations we're having with our clients, again, it points to the uncertainty. And you talked about it on the intro of, whether bond yields are sustainable at this low a level, given the amount of deficit financing that the U.S. in particular is going to have to do in coming years. And so, if anything, people are thinking that support in long term is less likely to buoy equity prices.
So, Julian, that's nominal yields. Talk to us about real yields. Is that relationship breaking down too?
Well, that's been the conundrum of recent months, and obviously, the Fed's desire to suppress nominal yields has been, a boon for the real yield story. But in fact, we're starting to see some signs of inflation perking up. So it really is a question, given everything, how much longer you can actually have real yields stay at this extreme low level. And again, particularly for high multiple technology stocks, where there's a huge amount of speculation, in our view, still left over from the froth of August, it's difficult to maintain that.
Well, Julian, let's think about this. How many people have come on programs like this in the last 3 weeks with the NASDAQ facing some trouble, talking up cyclical exposure and talking about Europe? 3 months of happy talk about the European economy relative to the United States, and it's over this Monday morning, with equities down by more than 3% and the prospect of more restrictions here in the UK in the next 24 hours, and potentially across Europe more so as well. Julian, how frame that story for us this morning, Europe versus the United States, given what's happening this morning and expected to happen through the week?
So from a long-term perspective, it's logical to expect, particularly given the political goings-on in the U.S., particularly given the valuation disparities and the overvaluation at the moment for technology, in a portfolio diversification sense, it makes sense to go into Europe. But what we're seeing is the virus has always been lurking in the background. And now that the virus seems to be rearing its head, unfortunately, in a second wave throughout Europe, that edge is diminishing.
I look, Julian, at the opportunity. I want to go back to somebody with cash burning in their pocket this morning. We're at SPX correction, almost there, 9.5%, I believe. Folks, where's the best place to allocate capital right now, even if you don't agree with Julian Emanuel?
Well, from our point of view, what we see in the U.S. is a healthcare sector which now arguably is likely to be under a bit more pressure, given the fact that you're about to adjudicate the Affordable Care Act. The Supreme Court that we don't really know what it's going to look like a couple of days after the election. But nevertheless, the healthcare sector, which tends to do well during times of geopolitical uncertainty, is trading at a 5.5 multiple discount to the S&P 500 versus an historic premium of 1.5 times. That has factored in our view, literally all of the negative politics that could happen, and perhaps even more.
Hey, Julian, great to catch up. as always. Good to see you. You're looking well. Julian Emmanuel there of BTIG with equity futures down 54. We're down by 1.63%. Tom, let's be clear. The risks we're experiencing right now were the risks that were always on the horizon. They've just been brought forward pretty quickly in the last couple of days. That's for Europe and for the United States as well. For the US on Wall Street, there has been this worry the day after the election for the next 3 months going into the end of January, worries about whether we would even have a result, worried about policy in the lame duck session, Tom. And I've got to say those worries got a whole lot more fuel over the weekend.
And different and nuanced as well. I mean, this idea of a lame duck session is really, really important. And the calculus of that is just simply unknowable, depending on who wins various Senate, various House, and indeed the presidency as well. So it's not only just the lame duck session, John, but the 14 flavors we could see.
We've got to talk about Europe as well, Tom. This equity market also breaking down big time on the European side of things. The UK is going to go through some tighter restrictions in the next 24 hours. I understand we'll have an address from the Prime Minister tomorrow, Tom. We heard from the advisors to the Prime Minister a little bit earlier this morning. There will be new restrictions on parts of this economy that have only just gotten started again. And the messaging here, Tom, is going to be fascinating. This is a government that we're telling people to get back to work and may have to tell some people not to go. This was a government that were telling people to go out and eat and drink, even subsidizing the effort, and they may have to curtail that as well. How they get that message across without contradicting themselves in the next 24 hours, I think that could be the groundwork for other governments to follow.
Well, to be sporting, you see unraveling in France as well, so it's not just about the United Kingdom.
Equity futures negative 53, down 1.6%. Much more coming up from Washington, D.C. with Kevin Cirilli, and a conversation you don't want to miss with the Dallas Fed president live on Bloomberg TV and radio with Bloomberg's Michael McKee, 50 minutes away. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A political fight is brewing on Capitol Hill following the death of Supreme Court Justice Ruth Bader Ginsburg. President Trump plans to nominate a replacement this week and says he will probably choose a woman. Democratic leaders say the post should remain vacant until after the presidential election. Ginsburg died Friday. She was 87. Federal Reserve Chairman Jerome Powell and Treasury Secretary Steven Mnuchin will be grilled by lawmakers Tuesday on the need for more stimulus to shore up the U.S. economy's recovery from the coronavirus slump. The focus of the House Financial Services Committee hearing will likely be fiscal policy. Time is running short for Congress to agree on another round of spending measures before it shuts down ahead of November elections. And a woman suspected of sending an envelope to the White House containing poison ricin was arrested over the weekend. Officials say she was taken into custody at the U.S.-Canadian border whilst trying to enter the United States. Her name wasn't released, but officials say her arrest comes nearly a year after she was deported from the U.S. for engaging in criminal activity. The letter was intercepted last week before it reached the White House. And in California, the Bobcat wildfire that has already scorched nearly 100,000 acres is expected to get even bigger. Fire officials say low humidity and wind gusts are likely to spread the flames. The fire has doubled in size over the past week and is on track to becoming one of the biggest wildfires in Los Angeles County history. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We never thought COVID-19 is going to hit us. But now, looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Equal justice under the law for citizens of every race, color, religion, and creed. I will be putting forth a nominee next week. It will be a woman.
The new battlefront down in Washington, D.C., the President of the United States. From New York and London, good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action, 2 hours, 12 minutes out this Monday morning from the market open, with equity futures down 51, negative 1.5%. Risk aversion, really intuitive, very clear. In foreign exchange, stronger dollar, exception to the rule, stronger yen, euro dollar 117.89. Commodities, softer, lighter, lower on crude, 40 handle, $40.26, down 2 percentage points. And in the bond market, curve flatter, yields lower at the long end, on a 10-year by 3 basis points, on a 30-year by a little bit more. The clear underperformance, though, looking worldwide, coming through from Europe, with the major benchmarks down a little more than 3%. And I just want to throw something out there, Tom, because I think it's pretty important. Language matters. How a government communicates with its people matters. The words they choose to use matters. And I do not like the word lockdown when it is nothing like the lockdown that we experienced through spring. The measures expected to be announced in the next 24 hours in the United Kingdom may well be called lockdown measures. They are restrictions, Tom, and they look nothing like what we experienced in spring. The schools are said to still be open. People will still be encouraged to go back to work.
And very interesting and very different from what we've seen in other cities, including Melbourne, Australia, as well. I want to point out the 2-year yield really is unched. I'm watching it carefully, 0.1331 on the 2-year yield. That'll be an important barometer here. Right now, Kevin Cirilli on his Changed Washington. He is our chief Washington correspondent. Kevin, I want to look to Pennsylvania. All my reading over the weekend is it is the focus of the President of the United States. This nation is something on the order of 22% Catholic, and yet in Pennsylvania we have a substantial Pittsburgh Catholic percentage, way above 40%, and even the state blended in is 50% up from the national level, 33% as well. Can a selection of a University of Notre Dame law professor make Pennsylvania go for Trump?
Well, for conservative Catholics, it would definitely mobilize that base in terms of pushing the issue of religion front and center to this race. Look, I mean, President Trump was able to hold together, rather, his Christian coalition from 2016, remarkably because of some of the judges that he has appointed to the Supreme Court. Look at Brett Kavanaugh, Justice Brett Kavanaugh, for example. Beyond that, Joe Biden, Democratic presidential nominee Joe Biden, trying to tap into the Kennedy Catholics of yesteryear and trying to bring them back into the party.
I mean, this is fascinating, Kevin, in that we've got 2 presidents vying in Pennsylvania. Mr. Biden with a unique sense of religion, and the president as well. How do you expect that to affect that vote if it's Barrett, or for that matter, the daughter of Cuban exiles, Lagoa?
Well, you know, I think in terms of the Supreme Court pick, I've got my eye on two things. First and foremost, President Trump has wanted Barrett for quite some time, and has even suggested that this was going to be the perfect opportunity to do so. She was a justice clerk for Scalia. And then beyond that, the second point is in terms of the fight that this is going to create in the run-up to the election. Just over the weekend, Senator Elizabeth Warren was at the steps of the Supreme Court saying that she is vowing to fight this tooth and nail in terms of the nomination process. But either way, you're rightfully focusing on Pennsylvania, but look at the developments of Florida just over the last 4 days, when you've got the Trump campaign saying that they're saying, adjusting expectations, that they have a path to the White House if they don't win Florida. For that to happen, should President Trump not win Florida in just a couple of weeks, I mean, he would have to really be turning the history books on their head in order to pick up a state like Minnesota. He wouldn't be able to lose Arizona, and yes, he'd have to win Pennsylvania.
Meanwhile, down in Washington, D.C., the Senate's going to meet at 3 p.m. They're going to be talking about Lagoa. They're going to be talking about Amy Barrett. Are they going to be talking about the economy at all?
Well, you know, I think that no, to be blunt. I mean, the Supreme Court has sucked out all of the oxygen in the room, Lisa, for at least the next couple of days, and especially if we get that name, if the president announces that name within this week, then no. I mean, fiscal stimulus talks aren't there. However, I would note that Speaker Pelosi on the Sunday shows over the weekend foreshadowing some of the tactics that the Democrats have at their disposal, whether it be sucking up airtime on the House floor. And so there's a variety of paths. So it's a lot of confusion here in Washington, D.C. as we enter into the final sprint with now a week or so until the first presidential debate, and a hole on the Supreme Court bench.
Kevin, there's a shift in markets right now, and we're feeling it across the board, and its shift is coming from the idea that the virus is worsening. We might see some sort of resurgence in the U.S. That is what the FDA commissioner said we are likely to see. We're certainly seeing it over in Europe. People are depending on their jobless benefits, and yet people are not going to be talking about the economy on the Senate floor. Which party looks worse as a result of this?
I think Washington looks terrible, and I think just given the dynamic of the Beltway in terms of the polarization, it's tough to, you know, I won't step in that picking a side, but you know, I think from either way, should the virus continue to intensify as the data is starting to suggest that it would, then that would put more pressure on lawmakers to get to a deal.
Hey, Kevin. Always neutral, great to catch up. Kevin Cerulli there, Bloomberg Chief Washington correspondent. Kevin, thank you. Tom, it's not difficult to spot the contradictions from both parties on how they're dealing with this situation and a similar situation back in 2016. It was the contradiction race over the weekend for both Democrats and Republicans alike.
Oh, absolutely. I mean, I'm with Kevin. The oxygen's been sucked out of the room. For our international audience, I can't find words for how this changes things, and we've seen that every time in recent history. This has just become a huge issue, John, that all of a sudden dominates all. And what I find important, John, is if you make that assumption that the oxygen's been sucked out of the room, guess what? Expect the unexpected. I'll go to Baroness Thatcher on that. You expect the unexpected. Well, Tom, what's that unexpected going to be?
I think the market gets the back joke this morning with equity futures down 57 and off by 1.7% on the S&P 500. The underperformance in Europe is very much a European story. But Lisa nailed it with Kevin. What's happening with the discussion on the economics? There isn't one, Tom. That's the problem. There isn't one. And for a long time through the summer, continually people said it was a matter of when and not if. Now it really is a matter of if.
John, you never say I nailed it. You only say Lisa nails it.
I know. Well, that's because I like Lisa.
What, you know...
What's the implication there, Tom? You're going to take that?
I don't know.
Tom and I are paid to like each other from 7 to 9 Eastern, and then after that, we start pretending.
You know,
and sometimes when I'm on air with you, Tom,
I want to say, Tom,
one day I want to nail it.
Congratulations on the Spurs win. by the way, Tom.
There you go.
Yeah.
No, that was a
He's happy
win.
with that.
5 goals. That's like the next 3 games output. I mean, you know,
We won 2.
It was a Gareth Awe. You know, it was like
that'll get us to Thursday, will it?
The Awe.
It's going to be a great week. Equity futures down 59. We're negative 1.8%. TK nailing it. Equity futures down 59, off by 1.8%. This is Bloomberg Surveillance on Bloomberg Radio and TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York and London, this is Bloomberg Surveillance Live on Bloomberg TV and Radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Monday morning, equity markets worldwide breaking down, led by Europe. as the continent could face some new restrictions, particularly in the UK, in the next 24 hours. In the equity market stateside, futures down almost 60, negative about 1.8%. The story of the bond market, clear for all to see. Yields lower 3 basis points on 10s, even lower on 30-year yields. That is a flatter curve this morning. And in foreign exchange, Tom, I know you're all over this, the story of FX right now. Stronger dollar, more broadly, but the Japanese yen just started to make a move. Dollar yen just inching lower and inching lower again this Monday morning.
Surveillance on equities, bonds, currencies, commodities, and the reason that John, Lisa, and I look at foreign exchange is it is the deepest market with the most to ask on bid and ask, the most to tell us, I should say, on bid and ask. Vasilios Giannakis joins us right now, Bank Lombard ODA, global head of FX strategy, which barely explains the focus here on the major currency pairs, the trade-weighted series for each of the majors, and, of course, the emerging market dynamics as well. Vasilios, I need to start with Japanese yen, which a vengeance has moved 2 big figures from a 106 down to a 104, ready to breach 103. Right now, 104.10. Explain to our audience what yen and yen strength signals.
Well, that's absolutely right, Tom. I think what we've seen in this broad-based rally against the dollar, the yen has actually lagged. And I think right now it's playing catch-up. And as a matter of fact, if you look at the historical patterns, if you look at what has happened in previous dollar down cycles, what you find is that initially the yen is not the first currency that actually responds into dollar depreciation, but yen appreciation comes a bit later at a more mature stage of the dollar depreciation cycles, potentially because the cycle becomes a bit more mature, potentially because participants adopt a more risk-averse appetite.
Well said, but this is critical for global Wall Street, Vasilios. What is the level on dollar yen that signals that new maturity? Is it to breach 100, to breach the major level?
Look, I think it is possible. Our forecast is that we're going to approach 100 by the end of the year. I think potentially the 100 level is going to be a level at which Japanese authorities may start making some noises, because obviously they're going to be concerned about the pass-through impact to an already extremely subdued inflation outlook. So I think it is possible. A central scenario is that it's not. It will also depend on the global macro backdrop. If we get a severe resurgence of the pandemic, which is still not our central scenario, then we could easily see dollar yen to 95.
Vasilios, noise is not the same as policy, so let's talk about it. Euro dollar 120, we heard the noise. Euro dollar yen 100, your call, we start hearing some noise. Can you talk to me about policy, what the follow-through looks like, either from the ECB or the BOJ?
Well, look, in both cases, the reality of the matter is that the room for policy maneuver is very, very limited. One thing about the euro that we need to take into account, the ECB watches predominantly the trade-weighted euro. If you look at the broad trade-weighted euro, you can actually see that it's been rising for the past 2 or 3 years, not the past 5-6 months. And the reason for that is strength of euro versus EM, or more likely EM weakness, which is not really something the ECB can do. But on a more ECB-centric basis, the issue for me is that if the ECB starts making noises, as you said, verbal intervention, they have to be sure that they can actually follow that with some credible policy response. And in this case, I'm not entirely sure, or let me put it this way, I think it's extremely hard to walk the talk. The room for policy maneuver is very limited. I expect that on an idiosyncratic basis from governing council members, we're going to hear some verbal noises and verbal intervention that are likely to act as a speed limit to the euro. But I think we're not going to see any, for example, rate cut by the ECB.
So, Vasilios, what I'm trying to think about, if we go through some choppy waters, it's early days. It's one day of this kind of price action of some real concern. Politics in the United States, restrictions over in Europe. What's the pressure valve in G10? What is the currency that everything else rallies against and there's not much pushback? Traditionally, it would be the US dollar at a difficult time. What is it now?
Well, I think for the time being it remains the dollar. It is just that the pace of dollar depreciation or the pace of other currencies appreciation against the dollar is likely to be far more slower than it was before, largely because the move has been very abrupt, largely because there's been a lot of positioning by speculators. We are talking about extreme dollar short positioning. So I think if you want to talk about the pressure valve in case of, the economy is managing to recover further, that definitely remains the dollar. But I think that from now on, it's going to be more of a two-way price action as opposed to a one-way street that it was over the past 5 months or so.
Vasilios, let's build on that, this idea that if the dollar still is the haven, then have cries for the devaluation going forward in the next year or 2 years with turmoil in the U.S., has that all been overstated?
I think that's a fantastic comment. I think we need to separate the cyclical from the structural here. Although I do have some sympathy about the structural argument for the reduction in dollars dominance on a multi-year basis, I don't think we necessarily need to utilize that argument to explain the dollar's decline over the past 5-6 months and potentially a further depreciation from here. These are very, very sticky money we're talking about. We're talking about global currency reserves. We're talking about asset managers that move these monies and these weights into different currencies at a very, very slow pace. This is not really what's been happening in the FX market. The dollar was overvalued. It included a number of risk premia, initially trade wars, then the pandemic. And now as these things get normalized and get priced out of the market, that's exactly what's happening. And on top of that, you have the Fed that pretty much has told us that they're going to be in zero rates for at least the next 3 years.
Well, but so let's push that toward the election. Almost every analyst comes on and says that they expect more volatility. We're certainly seeing that today with the political turmoil in Washington deepening. Does that mean the dollar will likely strengthen heading toward November 3rd and thereafter rather than weaken, even though the turmoil is based in the U.S.?
Look, I think if in the run-up to the elections, I think a lot will depend on the opinion polls. But at the same time, as I said, the build-up of short positioning is quite extreme. So I think I would expect to see a significant pickup in volatility. In the aftermath of the election, that will depend on the outcome. I think if we get a Democratic sweep, we're going to get the pricing in of an unwind of the corporate tax cuts that we've seen with the Trump administration, and potentially an unwinding of some of the tariffs that have been imposed to China. So I think this will be perceived to be good for currencies that depend positively on global trade, and euro is a prime example of this. So I think it's going to be good for the euro and bad for the dollar.
Leslie, tell me about the dollar dynamics in the reality of such a low nominal yield, inflation break-evens rising, and then a real yield that is hugely negative. What does that do in your world?
Well, it's definitely putting immense pressure, not only on the U.S. Real yield or nominal yield, but also on the U.S. versus the rest of the world yield differential. And on that account, if we try to model historically, although I do take the point that there might have been some structural changes in the relationship between yield differentials and the dollar, what's happened, and that's the bit of that is interesting, the dollar has collapsed by 10% over the past 5 months, but the differential has also moved further away. So by our estimates, we're talking about a dollar, trade-weighted dollar, that it's still about 14% overvalued. Now, to the extent that, we don't see the world going into another pandemic or another black swan, then I think that correction of that dollar overvaluation, of that misalignment gap, is going to continue.
What is the Erdogan tipping point? And Vasily, as I'm sure you've watched now, we've just gone out to new weakness, 7.61 on Turkish lira. I just don't buy the idea it's idiosyncratic and discrete. When does this become important, this profound weakening of Mr. Erdogan's lira?
Well, as far as Turkey is concerned, it has already started to become the tipping point. You can actually see in the rhetoric on several fronts. For example, we have had an escalation between Turkey and Greece over the summer that seems to be panning out a bit, although a lot of questions remain. But it is undoubtful that we have now the economic reality is biting into politics. And I think we've started reaching that tipping point at which, these things will have to be taken into account into a number of political levels. That being said, the story for the Turkish lira remains one which is extremely difficult. On one hand, it's very, very difficult to short it because of the negative carry if you short it. But on the other hand, if you look at central bank reserves, they're simply not there to prevent a significant depreciation of the lira, which is going to have tremendous ramifications to the banking system and the real economy.
Vasilios, great to catch up. Send our best to the team, won't you? Vasilios Giannakis there on its FX market. If you're just tuning in on Bloomberg TV and radio, a little bit of a market breakdown worldwide in the equity market this Monday morning. Equities in the United States down 55 on the S&P 500, off by a little more than 1.5%. The biggest story may be over in Europe, where the equity market is plunging by twice that kind of move. We have a move of around about 3% lower across some of the major benchmarks across the continent. In the FX market, there's that euro weakness, dollar strength we've been talking about in the last couple of minutes. Euro dollar 117.89 in the bond market. There's your bid. Tom Keane, 40 minutes into the program, we have not talked once about TikTok. Maybe that's a good thing.
Well, yeah, we're TikTok free today. We had a wonderful chat with Michael Wolf of Activate on WeChat as well. But John, what we also haven't mentioned in this blur is HSBC. I haven't done the inflation adjusted chart, but basically trading back to where it was in the 90s, John. I mean, HSBC, what do you perceive as their future?
About 4% of the FTSE 100 as well, Tom, and that stock is down by 6%, taking some weight off the FTSE this Monday. Their future questioned, and their future in China specifically being questioned, Tom. And that's the story this Monday, and why we're seeing this stock get beaten up just a little bit. There's another story out there as well about a whole array of banks and their behaviour over the last couple of years that we can talk about a little bit later. From New York and London, with Tom Keane nailing it just every single day, alongside Lisa Abramowitz and Tom Keane. I'm like just a lucky Jonathan Ferro.
5 goals.
And this is Bloomberg.
With the First Word News, I'm Rishika Gupta. A political fight is brewing on Capitol Hill following the death of Supreme Court Justice Ruth Bader Ginsburg. President Trump plans to nominate a replacement this week and says he will probably choose a woman. Democratic leaders say the post should remain vacant until after the presidential election. Ginsburg died Friday. She was 87. Health officials say the UK is on course for 50,000 new coronavirus cases a day by mid-October if urgent measures aren't taken to prevent the spread of the disease. Prime Minister Boris Johnson is widely expected to set out further restrictions Tuesday, although Health Secretary Matt Hancock says the government wants to avoid a second national lockdown. The country's health secretary also said today that Johnson is fully recovered from the virus, which put him in intensive care in April. And India added another 87,000 coronavirus cases to its tally today. That pushes the country's total to nearly 5.5 million. India has the world's second largest COVID-19 outbreak behind the United States. The country says 3 vaccines are in different stages of clinical trials. And a slow-moving tropical storm will bring drenching rains to Texas and Louisiana. Forecasters say Tropical Storm Beta could dump up to 20 inches of rain on some parts of the region over the next few days, though it's no longer expected to strengthen into a hurricane. Beta is the Atlantic's 23rd storm for 2020 so far, the second most active season in records going back to 1851. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I think that all of us revere the institution for which we work, and we want to leave it in as good shape as we found it.
The late Supreme Court Justice Ruth Bader Ginsburg there speaking to David Rubenstein back in 2019 as the political fight down in Washington continues to intensify over her replacement. The eyes come off the ball on the next fiscal effort in D.C., and that means one thing for this market: equities breaking down stateside on the S&P 500. Futures down 1.55% on the S&P. Lots of other things going on out there as well, including the potential for more restrictions in the UK and beyond across Europe. Euro dollar south of 118, 117.92. That is a weaker euro, stronger dollar through March of G10. In the bond market, yields in 3 basis points on 10s, 0.66%. Still right in the middle of that range on a 10-year Treasury over the last several months, but a real bid into the bond market this morning, Tom.
More market checks through the morning. Very important here on this correlated move. I would say the tape is a little bit better than where it was 90 minutes ago. What we're going to do and what we've done for years at Bloomberg Surveillance, if there's any big moment like this, obviously there's a politics, obviously there's the moment, the impact on our political economy, but there's also the people involved. As we spoke to our David Weston an hour ago about his clerking for Lewis Powell, David Weston on the fabric of the Supreme Court, we redux that now with Lisa Beatty Freylinghausen. She has the toughest admit in academics, which is women's lacrosse at Stanford. Everybody knows that's the toughest thing to do at the undergraduate level. And she went on off the lax field to clerk for one Ruth Bader Ginsburg, and she joins us now this morning. There's so much talked about, Lisa. You know, the notoriety of it and the RBG thing and all that. I want you to take us back to the grind of the day. As David Weston said, the grind of clerking at the court. What was the Ginsburg grind like?
Well, first of all, you know, it was my great good fortune to be able to clerk with her. She had been a hero of mine for many years, having worked at the ACLU before going to Stanford. You know, the walking into chambers, it was a serious place. It was everybody worked extremely hard. She lived for justice. She lived for the law. She, you know, she ran terrific chambers.
Right. Yeah, Lisa, the summary of this and Linda Greenhouse's effort in the New York Times, I thought really captured it, was a series of steps which culminated with the Virginia Military Institute case, the VMI case. You were with her then. Was she aware when VMI occurred how momentous it would be?
Oh, of course. I mean, the justice, having really been responsible for establishing, you know, gender equality before the law as an advocate, was acutely aware of the importance of that case. And in fact, 2 cases had come up that term. That was OT 95. Both the Citadel and VMI came up at the same time. You know, the VMI case was the better case for the court to take. And it was a very important case to her. You know, she was honored to be able to draft the opinion, to write the opinion, to author the opinion for the court. And she cared tremendously about everybody's views on that court and holding the big majority that she did in that case. That was a 7-1 case. Justice Thomas was recused because his son attended BMI, and the lone dissenter there was Justice Scalia, her good friend. But it was an important case. She thought a great deal about it, and she articulated, with reference to Justice O'Connor's case before that, she articulated the standard that states had to meet when excluding women, the exceedingly persuasive justification standard, which is quite a high hurdle.
What would you expect from Chief Justice Roberts as he tackles the future court, whatever the outcome may be? What can Chief Justice Roberts learn from your tenure there? The idea of Scalia and Ginsburg as close friends, can that goodwill still maintain on the Roberts court?
I think so. I think that the court is an extremely cordial place. There's a number of things that they do to maintain that collegiality. They shake hands before each oral argument with each other. They are good-natured and friendly. That is not to say that they don't disagree quite vehemently with each other. But I do think that with respect to the spirit on the court, it's a very cordial place. I think, you know, it was sad to see that moderate group leave the court. Justice Kennedy, Justice O'Connor, Justice Souter, and the court become, you know, a bit more like the country, a bit more polarized. But I do think that, you know, the justices care about the law, about the interpretation of the court. There's tremendous respect for each other on that court. And I do think there are things to learn from her tremendous friendship with Justice Scalia.
Lisa, for people who are not familiar with the Supreme Court, can you give us a sense of the proportion of cases that actually do come to a party line vote or a very heavily split vote? I mean, can you give us a sense of how much unanimity there is actually in the vast majority of cases?
The majority of the cases are decided, I believe, on unanimous grounds. I mean, it differs year to year, but it's really just the big, more political cases that tend to come down in a divided court. And, you know, those cases are usually, there's a lot of back and forth during the drafting of those opinions and the dissents. And those cases, tend to come down at the very end of the court's term, the end of June. But vast majority of the cases are unanimous decisions because the law is relatively clear.
Lisa, great to catch up with you this morning, and thank you for your time. I know it's been an upsetting weekend, so thank you very much for joining us. Lisa Beatty, Frelinghuysen there, the former clerk to Justice Ruth Bader Ginsburg. Looking at the price action this Monday morning to get you up to speed on what's happening in markets worldwide. Equities breaking down in Europe, down around about 3% on a range of benchmarks on the continent. In Europe, that's the story. Here's the story stateside. Equity futures, Tom, down almost 50, off by 1.5%. Bid still down in the bond market, dollar stronger, all of the above. That's the story. The worries about fiscal policy and messy politics in D.C. put together with the worries about what's happening on the COVID side of things over in Europe.
Yeah, nicely correlated and showing the ebb. Worse 2 hours ago, John, and a little bit better now, if you can call it better. I think the VIX out four big figures, 29.63. John, I'm not going to call it a crisis, but just a reset to caution. That's certainly what we've seen this morning.
Would you call it a healthy correction? I had a joke with Troy Bansky
I really have trouble with the media punditry on this. First of all, folks, you look at two standard deviations, but I can't do that because I haven't nailed it this morning.
You've nailed it twice already. Coming up next, conversation you don't want to miss.
He'll nail it.
Fed president,
He'll nail it.
Robert Kaplan. He'll nail it. Next on Bloomberg.
of staff who are personally affected by the fire, direct family as well as extended members. We've had people who've had to evacuate themselves. And so it's kind of balancing out the management of our critical patients with just making sure that we can stay stable ourselves. This is just a lot for everyone.
Trying to reunite owners with their animals at this location. We're not sure exactly how long we will be here, and so we're attempting to make efforts to create some infrastructure and to make a more permanent temporary shelter that can serve the residents of Jackson County for the next couple of weeks of meeting.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I'm not going to say that there's a bubble forming. I'm going to say that there is potential for one to form.
I think there's a lot of risk in the bond market right now for investors, a lot of complacency.
We've really moved into a new era. Monetary policy, the way we grew up with it, it doesn't work anymore.
Anybody who thinks that the China-US tensions are going away are simply wrong.
We're going to have to live with the impact of this virus perhaps for longer than we thought in May.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Television. The quality of our guests seen there, including Rebecca Patterson of Bridgewater. If there was risk and uncertainty in September into October, ramp it up. In a moment, our Michael McKee with Mr. Kaplan of Dallas at the center. But right now, Lisa Abramowitz, John Farrow, and Tom Keene, we welcome all of you. And John, it is just simply a Monday different from what we knew Friday.
It is not a quiet start this week to this Monday morning. Equity futures down hard. European equities down even harder. Bit into the bond market. Stronger Japanese yen. Everything you'd expect to happen on a risk-off day is happening. And when you look to Europe and the prospect of tighter restrictions around some of these economies, look no further than travel stocks. On the equity benchmark in Europe, just break it down sector to sector. Travel stocks, Tom, down 5%.
Many different things going on. And John, what I find just extraordinary here is it's not just about the future of the Supreme Court after the death of Ruth Bader Ginsburg. There's many stories. And to me, learning over the weekend about this new pandemic, a new heightened pandemic, is front and center.
It's the heightened pandemic in Europe layered on the three-dimensional political risk playing out down in Washington. And the three dimensions, Tom, are as follows. The path to a fiscal agreement, harder. The next one, the complexion of the Senate. Let's think about this. If you're a vulnerable Republican senator, your opposition just got energized big time going into this election. That's point 2. Point 3, we heard it repeatedly over the last several weeks. The worries about the day after the election, not having a result, what policy looked like in the lame duck session for the next 3 months. There were worries already. Those worries intensify this Monday morning.
The futures negative 51, Dow futures negative 520, and the VIX out four big figures earlier, 29.22. Lisa, an observation before we get to this important interview.
We've been having this narrative all year that low yields leads to higher asset prices. This has been the narrative consistently, and yet as yields go lower, that narrative seems to be dissipating. And that's my question. Are we seeing a true shift, Tom, or is this a pause before that narrative just reasserts itself?
Well, we will have to see. And again, we're watching the markets. We'll do more data checks for you through the hour. We have been most fortunate this morning on our coverage of the death of Ruth Bader Ginsburg. There have been many other topics as well, but if you're in economics, without question, this is our interview of the day. Our Michael McKee with the great dissenter, Robert Kaplan. Michael?
Thank you, Tom, and good morning to you, President Kaplan. Dallas Fed President Kaplan, one of two dissenters last week as the Fed adopted new forward guidance that incorporates average inflation targeting. You endorsed the old forward guidance and dissented on the new because, according to this statement, you prefer the committee retain greater policy flexibility beyond that point. What does that mean?
What it means is I believe strongly we should keep the current setting of the Fed funds rate, i.e. at 0 to 25 basis points, until we've weathered the pandemic and we're well on track to achieve full employment and price stability. That, by the way, is probably going to take at least 2.5, 3 years. The issue is, beyond that point, once we've weathered the pandemic and we're on track to reach our goals, I probably think it's appropriate to remain accommodative, or maybe even highly accommodative. I'm not sure it's appropriate to decide right now that at that point we should leave rates at 0. I would rather leave those judgments to future committees because I think the world is going to look very different post-pandemic than it does now, and I'd rather leave the judgment to future committees who can assess all the factors that are relevant in order to make that decision.
Well, does that suggest you think that we could come out of this with faster growth than most people are anticipating?
Or I'll put it a different way. In my own forecast, I think we're going to have solid growth in the third quarter, 30% annualized, a strong fourth quarter, above trend growth in 2021. And in my own forecast by the year 2023, and I know that's going out a long ways, we could start to approach an unemployment rate certainly below 4%, say 3.5 to 4%. And so I believe that is possible. Obviously, we'll have to see, and a lot of that is going to depend on how well we manage this virus, fiscal policy, and a whole range of other decisions. But when we get to that point, the question before the House is, do you want to still be accommodative in light of our new framework in order to meet our inflation goal? In order to remain accommodative, does that mean we need to leave rates at 0? And I'm not sure, but that's the point. I think it's hard to know right now that far in advance, and I want to make those judgments at the time.
Is that enough to dissent on? Important enough?
For me, it was. And the reason it is by making this commitment now, first of all, there are a few reasons why I dissented, what I just went through. And then my own view is I'd rather use forward guidance where we got more positive benefit. Going into the meeting, the world already thought that rates were going to stay extremely low for the next 2 or 3 years. And so my concern was by making this commitment now, I wasn't sure how much additional benefit we're going to be. But on the negative side, it means if you're in the asset markets, if you're a saver, if you're a pension fund, if you're an insurance company, if you're a market participant, it basically gives you a signal that you're going to need to take more risk. And my concern is about building up excess risk taking, which can create fragilities and other excesses in the system, which are hard to see in real time and easier to see in hindsight, but could create issues for us to meet our goals. And so that was the reason I felt that the costs were not worth the benefits.
Well, in his news conference, Chairman Powell was at pains to say over and over again, the new guidance is strong and powerful, but there seems to be a lot of skepticism on Wall Street about that.
Well, and I wouldn't overread the market reaction. It's been a few days, and I think these decisions usually are not are not, the reaction is not measured in 3 or 4 trading days. It's measured in the fullness of time. I think making a statement that people should expect even beyond the pandemic that rates are going to stay at 0 until we reach 2% and are on track to moderately exceed 2% for some time. I think as the months and the years go by, I think people will increasingly realize the power of that commitment. And so I think it's more significant than the markets may be initially realizing.
Well, Washington is consumed now by a fight over the Supreme Court, which many analysts say pretty much ends chances of getting any kind of additional stimulus, at least before the election and possibly afterwards. What does that mean for the economy?
Well, I think in my forecast for this year, I think some additional fiscal stimulus is part of that. And one of the unusual features of this downturn has been consumer spending has been very strong despite the elevated unemployment rate. That usually doesn't happen in a downturn, and it's happening because of strong fiscal support. And so I think some extension of unemployment benefits is critical. And I also, the second thing I'd mention is aid to state and local governments, I think, is also important. They have big fiscal holes. They are needing to cut back because of that right now at a time where we're asking them to shoulder more responsibilities in fighting the pandemic and getting kids back to school and a number of other responsibilities. And so I think some fiscal support, I'm still hopeful for it, and I think it's important to this recovery.
The markets are, at this point, not just discounting what you did last week, but concerns over the Supreme Court and a round of pandemics. We've been asking for months about whether markets were too high and might fall, dragging down the economy. What's your read on what's going now?
Well, I won't go too far in this job commenting on the markets other than to say market cap to GDP is currently at a historic high. And at historic highs. There's some understandable reasons for that, but normally when you've had this kind of run, some kind of correction could actually be healthy. And so the thing I watch when I see a market sell-off is our credit spreads widening, and I don't see them widening, which tells me right now this is more of a correction, maybe not a fundamental change. If I saw credit spreads widening along with the sell-off, that would tell me something different, but I'm not seeing that.
Well, tight credit spreads and low interest rates suggest the Fed policy is working at the moment. But if we do have a need for additional stimulus and we don't get it, is there anything the Fed can do, or are you sort of out of the game, done what you can do?
I think monetary policy has done a lot. We still have more things we could do. And certainly with either asset purchases, I think we could do more to help small, mid-sized businesses. But I think the path of the pandemic, the incidence of the virus is still going to be the #1 determinant of how fast we recover. And I think some amount of fiscal policy secondarily is important. But I think monetary policy will do its part. It's not, though, the primary driver of this recovery right now. I think it's still how well we manage the virus.
The other issue you just mentioned, the Main Street lending program, and you also talked about the municipal lending facility. Chairman Powell goes up to Capitol Hill, and they're going to be asking him the question, why aren't those working? There's been almost no take-up. One loan for the municipal facility, and only 0.2% of the money for Main Street has been lent. What's wrong with the Fed programs?
Well, so let me just segment these. I think it's a mistake to judge the effectiveness of most of these programs by the take-up. The Main Street program, let me put off to the side. That's a little bit different. But on a municipal finance program is a good example. We have backstopped issuance in the municipal finance market with a capacity of $600 billion. As soon as we announced that program, the municipal finance market rallied. Money flowed into that market. That's true with the corporate bond market. It's true with other markets that we've done this for. So I actually think the measure of how effective those programs are are people able to issue in the private market? The fact there hasn't been much take-up, we're intended to be backstop pricing. So I think those programs have actually been very, very successful. The one program we've scrutinized more, though, is the Main Street program. On that program, take-up is a good measure of how effective it's been, and has been a lot of discussion. there's still stringent credit requirements for that program. The banks have to agree to lend as part of that program. And so we are looking at ways, and there's been discussion, can more be done to make that program more attractive? But again, the Fed is a lender, not a spender. And in order to ease the requirements of Main Street, you'd have to be willing to tolerate more credit losses. And that's not a Fed decision. That's a decision for Congress and the Treasury.
Robert Kaplan, president of the Dallas Federal Reserve, thank you for joining us this morning on Bloomberg Radio and Television Worldwide. We'll send it back, speaking of worldwide, to John Farrow in London.
Mike McKee, thank you. A wonderful interview. Absolutely brilliant. And Tom, something that we heard there I think is really, really important. What tests the patience of a policymaker at the Federal Reserve is not equities, it's credit. It's high yield spreads, it's investment grade spreads. That's what tested the Fed back in late 2018. That's what tested the Fed in 2020. And right now, even with equities doing what they're doing, spreads have been really stable in and around 500 basis points on high yield. And I think that's critically important.
Now, if we see them break, that is a change tune. But even with the difficulties of the market this morning, futures at negative 58, it's true, John, we've been incredibly range bound. And you see that with the moving averages that come down to 1 point. I'm moving my hand here on radio. It looks great, right, John?
It's just fantastic.
It's just fantastic.
I just love that. I'll do it as well.
You can do it exponential, or you can do it linear.
Great radio.
You know, it's great radio.
Just awesome.
It's great
you can do it with two hands. Just brilliant. Beautiful. You nailed it.
Thank you.
From New York and London. This is Bloomberg.
We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the growth GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
It's a severance. It'll continue to be named TikTok as it was all along, and that's it. That's it. So I can say that I have given the deal my blessing. If they get it done, that's great. If they don't, that's okay too. But it's a great deal for America, and very interesting.
The President of the United States celebrating a deal between Oracle and TikTok, a deal we'll talk about in just a moment. From New York and London this morning, good morning to you all. Alongside Lisa Abramovich and Tom Keene, I'm Jonathan Ferro. Your price action shaping up as follows. 1 hour, 12 minutes away from the opening bell this Monday morning. Equity futures still near session lows, down 53 at negative 1.6%. It is worse in Europe, let me tell you that. Euro dollar 117.89, coming in 0.4% on that currency pair. Stronger dollar through the bulk of G10. And there's the bid in the bond market where it's been for the last couple of hours, Tom. Yields come in 3 basis points. Your yield on a 10-year maturity is 0.66%.
It is off our radar as of Friday and the death of Ruth Bader Ginsburg, but it's still very much front and center. As we spoke to Michael Wolff earlier about WeChat, John Farrow and I have been just waiting all morning to get back on the TikTok analysis bandwagon, and we do that right now with Lisa Abramovich. Jeffrey Gertz is at Brookings. He has wonderful international perspective on national security and on the processes of national security. Dr. Gertz joins us now with Brookings, their Global Economy and Development Fellow. Dr. Gertz, what's the next step here? I've yet to have a single person tell me this is anything at TikTok but contrived. What's the next step for an invented transaction?
Great, thanks. Happy to be here. So I think one next step that we're still a bit unclear of, we're still waiting on all the details to come out, but one question is whether the Chinese government will need to approve this deal or not. A big sticking point up to date has been the Chinese government was treating the TikTok algorithm as a potential technology with national security implications, meaning they were having export controls governing the license of the TikTok algorithm. So I think one question we're definitely still waiting on is how the Chinese government will respond to this new deal.
Meanwhile, what, Jeffrey, can we take away from the way this deal went down? There was a Carnegie Mellon professor quoted in a Bloomberg story saying the government should be in the business of citing national security concerns, but they should not be in the business of brokering a backroom deal with a U.S. company. Is that how it's being perceived?
Yeah, I think this has been a really interesting case to watch. So we definitely know that through the Committee on Foreign Investment in the United States, or CFIUS, the U.S. government does often play a role in regulating foreign acquisitions that have national security implications. And I think it was entirely reasonable for CFIUS to get involved in this TikTok deal. But having the president be personally involved in all of the kind of front room negotiations and all over the newspaper pages that we've seen is very different from how this normally goes. And we normally don't see, the president weighing in on kind of different potential acquirers or anything like that. So that aspect of it has definitely been strange to watch for those of us who are used to a very secretive national security process.
Is there any precedent in the U.S. for this type of transaction and this sort of government intervention that we've seen here?
So again, we've seen similar interactions and similar government interventions on other national security threats and increasingly on other kind of technology and data-related acquisitions. So we saw Grindr, the gay dating app that had been acquired by a Chinese company. The U.S. government did compel divestment in that case. We similarly saw on Stay in Touch, which was a company that handled the hotel booking data for major hotel chains. That was also ordered divestment from a Chinese company. So those kinds of interventions we're used to seeing now.
Dr. Gertz, real simple. This is a question I asked Michael Wolff earlier. Is there any evidence of a national security threat by either of these entities?
I think it's a difficult question to answer for a few reasons. So, first off is just that the U.S. government is always very secretive in telling us what exactly the national security threat is. So we're kind of forced to take them at their word, and it's hard for outsiders to analyze the merits of the case. I will say that there are real concerns around data privacy, around technology, potentially around the Chinese government having say over, which videos the TikTok algorithm is choosing to show. So again, you could imagine scenarios where the Chinese government has a say in promoting certain political voices and censoring other political voices. And I think that does raise real concerns for the U.S. government. It's important to note, though, there's no evidence that they've ever acted on any of these things so far. These are sort of potential problems that could arise.
Well, this is really important. Wait a minute. You just said it eloquently. Is there any indication here of anything but a potential risk?
This is all potential risk so far, but I think it makes sense to take these potential risks seriously.
Hey, Jeffrey, great to catch up. Jeffrey Gertz there of Brookings. Tom, in many ways, I think we're talking about the wrong company. We've talked for the last several weeks about the United States taking on the characteristics of China, telling the Chinese and the Chinese Communist Party that your companies, if they want access to our markets and we consider them national security threats, they need some kind of U.S. partner, or perhaps even a U.S. company needs to buy them. WeChat. Let's talk about WeChat. It is very difficult to act like China if you are not China. They can't ban WeChat right now this morning, and hardly anyone's talking about it. Why can't they ban WeChat this morning? Because there was a court injunction, Tom. A court injunction grounded in First Amendment rights, freedom of speech. And, Tom, this is going to be the difficulty for the United States. If you want to face off with the Chinese Communist Party, China's doing it by their own rules, and it's much, much harder to replicate them here in the United States.
The game theory of this, to me, is just wacko. I mean, that's a very sophisticated phrase, John, and I know I nailed it. But, the bottom line here is Dr. Gertz was great there about the potential risk. We're doing all of this on potentialities. How does Beijing respond to that?
Well, Tom, let's talk about the potential for the U.S. government. When you know that the Chinese Communist Party, and you have some evidence of where the Chinese Communist Party has been hostile before through cyber, etc., do you want them to have the data of U.S. citizens in the way that they could access the data through an app like TikTok? And I think the answer on both sides of the political aisle, not my answer, but on both sides of the political aisle right now, the answer to that is probably not. Headline cross on a Bloomberg, Tom, I want to get to. The President of the United States wants a final vote on the Supreme Court pick before the elections.
Yeah, it's a big deal.
It's coming from an interview with Fox News in the last couple of minutes, and it is a big deal, Tom, and it plays into the bigger story in this market right now as well, the what next down in Washington.
Yeah, absolutely, no question about it. But, as we talk about potential, I would say, John, we need a potential data check. Why don't you do it?
We'll do that for you right now, Tom. 1 hour, 5 minutes away from the cash open. Here's the actual data check. There's the move in tech stocks this morning, with Oracle getting a bid after that deal potentially closes. In the equity market, futures down 59, negative 1.75%. There is a weight to this tape. We start to climb lower again. In the FX market, euro dollar 117.74. The bid picks up in the treasury market. Yields lower down by almost 4 basis points to almost 0.65% on a US 10-year. For the US 30-year, the bid at the long end is strong. A 30-year yield that comes in 6 basis points almost to 1.397%. Risk aversion this Monday, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. This is Bloomberg Surveillance, heard on Bloomberg Radio, seen on Bloomberg TV, live from London and New York. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Risk aversion this Monday morning from New York and London. A good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance, and here's your price action 1 hour out from the opening bell in New York. Equity futures down by almost 1.9% now. There is a weight to this tape in the last 30 minutes. We add to the losses. We're down 60-odd points now on the S&P 500. Euro-dollar south of 118, 117.74. Yields heading lower as well, down by about 4 basis points to 0.65%. Two stories. The political division down in Washington. One of them, the other story, the potential for restrictions across various economies in Europe, with the United Kingdom very much front and centre. The Prime Minister, we can confirm, the British Prime Minister Boris Johnson, will be addressing the House of Commons on the COVID response tomorrow. The most responsible thing I can say at this point, Tom, is I don't know what the restrictions are, what many people expect them to be after hearing from the advisors to the Prime Minister today. Are things focused on various sectors of the economy and various restrictions, and something that I've been guilty of doing myself in the last week, but want to make clear I don't want to do going forward. I don't think we should call this a lockdown until it looks like something we saw in March. And right now what I'm hearing are further restrictions and not a lockdown.
I guess schools will still be active even with the so-called lockdown. I don't know what phrase you're going to come up with, John, but serious. And also, I should point out, folks, serious in France as well. We're going to watch the markets carefully. They deteriorate, negative 63. I would say possibly off of the headline we saw from the President of the United States speaking on Fox, and still I can see speaking on Fox, talking about he wants a vote on the next Supreme Court justice here before the election. We turn to the economy now with futures at negative 63. Megan Green joins us with the Harvard Kennedy School. Megan, I want to go to the great thrust I see right now, which is the inflation dynamic and when a central bank acts. Inflation is rising. Do you get out front and act? Do you get out front along the path of rising inflation? Or a la Kashkari, do you wait for the very end of it in a truly Latin ex post manner? Which is the Fed doing right now?
It's the third, I think, of those three. And that's embedded in the Fed's new monetary policy strategy. The debate happening right now is whether we'll get inflation or not. And I think that only matters because if you get inflation, then the idea is the central bank has to hike into it. And the Fed has pretty much said, no, we don't, actually. We're going to average out at 2%. They've undershot for so long that they're going to have to allow inflation to overshoot 2% in order to average out at 2%. So I think they'll wait not just to see the whites of inflation's eyes, but to see the back end of it. Also, central banks know what to do in the face of inflation. They don't really know what to do in the face of deflation.
But in rules, if we think of John B. Taylor at Stanford and others that like rules, Charles Plosser, the conservative ex-Philadelphia Fed, the Rochester School, the Freshwater School, what is your definition of overshoot? They wanted rules. Do you have a definition of overshoot?
So I think that the Fed would tolerate inflation of 2.5 to 3%.
Wow, that high, that high.
I think so. I mean, look, the inflation has been persistently below the target since it was adopted in 2012. And there are a bunch of structural reasons why I think inflation will continue to be difficult to generate. And so I do think if they could get inflation of 2.5 to 3%, the Fed would celebrate in the short term and would watch it and not hike immediately.
Well, let's think about what they can celebrate right now, Megan. We come out of a summer where many economists thought we would go into this summer lull, that things would start to roll over a little bit. There are some people who have changed their minds after the data that has come in over the last month. You're different, Megan. You haven't changed your mind. You're calling this a Wile E. Coyote moment for the U.S. economy. Can you walk us through what you're seeing or what you expect to see in the coming month?
Yeah, I mean, I think if you look at a lot of the high-frequency data, it does suggest that maybe economic activity is rolling over a little bit. And I think the most important piece, though, is policy. So whatever happens with the virus, we've had a whole bunch of support for unemployed people and small businesses expire. If that isn't re-upped, and now it looks less likely that it will happen before the election or even before the end of the year, that's taking out a lot of support from the economy. I think we could well go into recession. 3 months ago, I would have said, of course, we'll have more fiscal support. That's a complete no-brainer. But now I think the Democrats and Republicans are so incredibly divided over a number of things that it's actually unlikely before the election.
So, Megan, we've talked about this a couple of times already, you and I. You think a double dip is on the cards. And I don't mean to get cute about it, but when do you expect to see that second dip?
Yeah, so I think it's possible. It's all dependent on policy. We're getting a little bit more support for unemployed people with the $300 a week federal checks, but again, they're not being dispersed widely. So it all depends on how much more support we'll get and when exactly we get it. Obviously, the longer we wait, the higher the likelihood that we'll end up going into recession. So it's impossible to give you specific timing. But I do think, unless we build a safety net under the economy, I think the coyote will fall into the chasm. That's how it works.
Megan, we've talked a lot on this show, and you've talked a lot about the bifurcated nature of this recession, the idea that the haves are doing just fine and the have-nots are doing terribly and bearing the brunt of the pain. How bad will the scarring be on the have-nots, and which groups are in the have-nots that you see as being most affected?
Well, I think that depends on what you think the economy will look like on the other side of this. And it's probably a bit too early to say exactly, what it will look like when the dust settles. But I do think we know that certain things probably won't happen anytime soon. Short of a vaccine or treatment, a lot of us will be working from home. I think gyms will suffer, travel industries will suffer. And those employees of those sectors, they were the hourly service workers who were hardly getting back on their feet before this crisis hit and now have been knocked back off. So I think that, a lot of these service sectors are going to struggle for a long time until we get a vaccine. And even after we get a vaccine, I think we'll still continue to work from home quite a lot. Well, I'll watch more Netflix than I used to just because I'm used to it rather than going to the cinema. I'll, probably travel within the U.S. a bit more than I used to because I'm a bit more used to it now. So I think if you just think if activity only returns, 90% of what we used to have in every industry, scale that up across the economy. And that's a huge drop in activity. And I think it's the hourly service workers who will mainly suffer.
Well, and to John's point, which is a good point, which is how long we have. In other words, when are we actually going to see this double dip? At what point, how long do we have to wait before fiscal support, before you start seeing a material decline in the possible recovery or the sort of near-term growth of the U.S. economy?
Well, we're starting to see some of the high-frequency data roll over, as I said earlier. It hasn't tanked yet because I think the programs that were implemented worked, and a lot of people stored up and were saving. But people and businesses can't live off of their savings forever. So when those cash buffers are used up, that's when the economy will tank, and it could just be a couple of months.
Megan, we have an economy of which Atlanta's telling us is up 25, 28, even 30%. One big Q3 bounce. And then there's the then what? What do we dampen down to? Where is I'm not asking as a market economist, but on an academic level, how do you fold in where potential GDP is and how that equation dampens down? Are we, forget about Morning America, we're nowhere near 4% real GDP. Are we even near 2% real GDP?
So, no, I think potential growth was already a bit below 2% in the U.S. anyhow. It's hard to know what this does to productivity. On the one hand, you have to believe that a lot of productivity has been destroyed and a lot of innovation that would have isn't happening now. At the same time, for those of us who are lucky enough to be able to work from home, we're getting by with fewer resources, and so that could boost productivity, actually. So I think fundamentally net, it will probably be down a bit. I'd also highlight that we've had this V-shaped recovery in the short term, but if you look at the high-frequency data, where people are spending money now is not where we lost all the activity in the aftermath of the immediate pandemic. And so there's a huge dislocation in the economy, and that suggests that from here on out, it's going to be a much harder slog.
John, I mean, we got to do a data check here in the middle of this conversation with Megan Green, because the tape is deteriorating in all sorts of ways. And John, I would really look at the bond reset that we're seeing right now, down 4 basis points on the 10-year yield, and it goes into what Dr. Green's talking about.
Yields lower, curve flatter, equity market down 61 on the S&P. We're negative 1.85% on the S&P 500.
Look at the Dow.
Megan, we caught up with President Kaplan a little bit earlier and talked about the importance of the credit market and the stability that we're seeing in credit spreads. Megan, how important is that just in terms of broader financial conditions for this Federal Reserve?
So it's really important, but it's also hard to get a signal from that, right? Because credit spreads aren't blowing out, precisely because the Fed has stepped in to backstop the credit markets. So that suggests that what the Fed has done is working. But looking further ahead, one day when the tide recedes, the tide of Fed liquidity recedes, what's going to happen? None of us really know. And so I think that Kaplan was probably right in highlighting that financial stability is a real concern. We could be sowing the seeds of the next bubble right now. And in the face of market meltdowns in March, that made absolute sense. But I do think going forward, we need to worry about that.
Megan, great to catch up. Megan Green there of the Harvard Kennedy School. Lisa, this was called Goodhart's Law. Goodhart's Law, that a measure ceases to become a good one when it becomes a target. The credit market is very much a target for these central banks.
Well said, John. I think this is sort of the conundrum for a lot of credit investors. Corporate debt used to be the canary in the coal mine. When you saw spreads blow out, you knew that was a leading indicator for other risk assets. It seems to have lost that. And what does that mean for all of these models that use credit as that leading indicator? It's lost that just because of what you said. It is being targeted by the Federal Reserve, regardless of anything else. And that, to me, is a huge shift in markets and models.
Do we have a leading indicator now, Tom Keene? Cross-asset worldwide. I mean, we touched on this a couple of weeks ago about the commodity market.
Really good question.
Maybe the cleanest trade, supply versus demand, was crude a couple of months ago at the peak of the pandemic. I just don't know what it is anymore.
I'd have to do a lot of chart work. I would point out Chris Verone, writing a brilliant note this morning for Strategas, really points out some of the odd resiliencies in the way we're going down that may give some enthusiasm here. He notes copper is one indicator. But, John, I look at my Bloomberg screen, and to your wonderful point, I mean, what do you pin on here right now? The one thing I would say is I got a great respect for what yen does in moments like this, 104.14.
Bitcoin.
Yen stronger, dollar stronger. I didn't hear what Lisa just said. I just want to pretend.
Lisa nailed it.
In the equity market, down 62. She nails it every morning. We're down 1.9% on the S&P 500.
Can I go home?
You did not. You can, whenever you like. Stay home all week from London and New York. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump says he plans to announce his pick to replace Supreme Court Justice Ruth Bader Ginsburg by Friday or Saturday of this week. Trump also told Fox News he wants to see a Senate confirmation vote for his nominee before November's election. Trump has said he will likely pick a woman. Ginsburg died Friday at the age of 87. President Trump heads to Ohio today. He'll address supporters in Dayton at an event called Fighting for the American Worker. He'll then head to an event in Swanton. Trump won Ohio by 8 percentage points in 2016. His chances for a second term rest heavily on being able to maintain the margins he won by in 2016, particularly in suburban areas. Health officials say the UK is on course for 50,000 new coronavirus cases a day by mid-October if urgent measures aren't taken to prevent the spread of the disease. Prime Minister Boris Johnson is widely expected to set out further restrictions Tuesday, although Health Secretary Matt Hancock says the government wants to avoid a second national lockdown. The country's health secretary also said today that Johnson is fully recovered from the virus, which put him in intensive care back in April. and a slow-moving tropical form will bring drenching rains to Texas and Louisiana. Forecasters say Tropical Storm Beta could dump up to 20 inches of rain on some parts of the region over the next few days. Though it's no longer expected to strengthen into a hurricane, Beta is the Atlantic's 23rd storm for 2020 so far, the second most active season in records going back to 1851. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think it is particularly important that the Senate take it up and confirm this nomination before the election.
That was Senator Ted Cruz on the Supreme Court vacancy left behind by the passing of the late, great Supreme Court Justice Ruth Bader Ginsburg. That was him speaking over the weekend to ABC this week. On the connection between Washington and Wall Street, just one of the best PIMCO's Libby Cantrell, the head of public policy, coming up a little bit later this morning on Bloomberg TV. Tom Keene, that conversation starting in 10 or 15 minutes' time as we work our way to the opening bell with futures down and down hard.
Looking forward to that, rather. And, of course, we're seeing a real deterioration or a second leg down in the markets right now. I believe the president has finished his comments to Fox and Friends where he did state he wants a vote before the election. What we've tried to do this morning with work from Lisa Freelandheisen, our David Weston, is get you people with real tangible experience in this uproar. One of those is Russell Wheeler out of the University of Chicago. He's former deputy director of the Federal Judicial Center at Brookings as well. And we are thrilled that Dr. Wheeler could join us this morning. Dr. Wheeler, I want to go back to 1956 and Dwight David Eisenhower, who needed the Catholic vote badly. Cardinal Spellman was giving it to him. You need to hire a Catholic. And they literally went out and got a guy they thought was somewhat conservative in Mr. Brennan. Well, that, changed over the years. But we have many times, back to the middle Supreme Court of the 1880s, we have many times gone through this, haven't we?
Well, many times gone through what? If it's gone through election year vacancies, not really. There have been 8 by my count. One of them was the Brennan vacancy created by Sherman Minton, whose health failed him. Eisenhower recessed appointed Justice Brennan. Then the Senate handily confirmed him in early 1957. That was not controversial, but we've come a long way since those days.
Yeah.
Those days back in the 1920s when justices were confirmed basically on the day they were nominated. It's a different world.
It's a different world today. And what world would you expect to see? Or as a president moments ago says, he's taking the line of conservative Republicans, let's go, let's get this done by the election. Can they accomplish that?
Well, they have enough time. I mean, they'd have to rush it through, but the Democrats, so they have a few monkey wrenches, they can slow things down, but not much really. So if they get their 50 votes plus Pence, they'll be able to confirm a justice pretty much any time before the election or after the election. It all hinges, I think, on whether or not how many Republican senators decide that it's just too hypocritical to vote to confirm a Trump appointee at this point.
Russell,
nominee at this point, given what happened to Merrick Garland, back in 2016.
There's been some discussion by some Democrats that if Republicans push a nomination and confirmation through, they would possibly talk about packing the court if Joe Biden does win the presidency. How realistic is that threat?
Well, I think it's a lot more realistic than it was a couple of days ago. I was quite skeptical of that, figuring that you don't tamper with institutions that lightly, but I must admit, I think there's going to be a lot of pressure to counteract a midnight appointment, is what this would be, late in the election season by a president who, you'd have to say, it looks like he's not going to get reelected. So it's not a pretty picture, and I think the Democrats will come back if they have the Senate and the House and the White House. They're going to seriously consider doing something to offset it.
So what would that look like? I mean, this was tried by FDR back in the day, but what would a court packing kind of measure proceed as likely?
Well, Roosevelt's was a little more duplicitous. Roosevelt said, I want the authority to appoint another judge for any appellate judge over the age of 70. This is quite direct. It just says the court has been at 9 since 1868, 1867.
Yeah.
We're going to increase the size to 11.
Well,
that just gives a lot of work to the Supreme Court carpentry shop, but that's about all that's entailed.
This is critical. This is just critical, though. The Supreme Court Act of 1869 got us to 9 members. Right. Is that sacrosanct? Is that just something that's untouchable?
Well, the reason it's 9 is because at that point there were 9 circuits, and the justice's job back then was largely to serve as trial judge on what used to be called the circuit courts, trial courts. 9 circuits, 9 justices. That's the reason it went up and down. When the court locked it in at 9, there's nothing magic about that number. It's come to be regarded that way. And most state Supreme Courts are 9 or less. Most world common law courts are 9 or less. But an 11 court member court can function, obviously.
So this is one final question, and this is just so important. You're not uncomfortable forgetting about conservative liberal with the idea of an 11-member court?
I am uncomfortable with it, but I think there's a lot of justification if the Republicans ram through this late in an election by a president who's clearly has no popular mandate whatsoever to impose a very conservative federal judiciary on the country. He ran on that and he lost the popular vote massively. So I think the court's legitimacy is already going to be in tatters if he gets another appointment, and it's just one more ratcheting down of the institution.
This has been hugely beneficial. Russell Wheeler, thank you so much. Dr. Wheeler, of course, with Brookings, the former Deputy Director of the Federal Judicial Center. Lisa, I really can't say enough about our team. They've been working nonstop since Friday evening, trying to get really thoughtful voices. And I think, Lisa, we really accomplished that today.
I agree. I think Michael Purvis of Talbackin put it really well in a note over the weekend where he said normally the Supreme Court justice vacancy would not make geopolitical noise, right? This wouldn't have an effect on markets. This time is fundamentally different, Tom, and this is really important. The idea that it will suck the oxygen out of the room in Washington, D.C. and take the conversation away from the economy is a huge deal and really torpedoes a lot of the chance of a fiscal deal before the election.
Futures negative 60 right now. Lisa, you see that headline coming out? I don't know what to make of that.
Well, that Oracle and that ByteDance will have no ownership in TikTok. This is coming from Oracle, reported by Axios. Again, the head scratcher of a deal gets to be even more of a head scratcher because ByteDance will not be necessarily transferring their algorithm to TikTok Global. We'll dig into it to find out. I do know Oracle shares significantly higher in pre-market trading, Tom, so sort of bucking the trend here of the NASDAQ.
It's a little bit of a trend up on that headline. I'm going to suggest we got a lift, negative 63 on futures, up to all of negative 59 as well. We're looking for every little lift we can get. In the yield space, in 4 basis points. Lisa loves when I say the yield space. Pharaoh hates it, so I got to only say it with Lisa.
Thank
you.
The stars in the yield space are bright.
On the 10-year yield. The 30-year bond was of 1.39. We now enjoy 1.40 on a 30-year bond. These are little moves, but it's that kind of day. Yen backs up at 104.04. Slightly weaker yen, 104. Can you top this? McKee with Kaplan coming up later from St. Louis. Mr. Bullard in the 6 o'clock hour as well. Please stay with us through the day, particularly news from Washington and the tumult of these markets. This is Bloomberg Radio. This is Bloomberg Television.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
story, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
The cybersecurity sector obviously is no secret that it's probably going to do very well in the next 5 to 10 years, say.
2020 has already surpassed previous years' funding in digital health in particular.
I personally prefer to buy businesses that make money, and if you can buy them that are unlevered, that just means they're even cheaper.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell this morning. Your Monday morning price action messy. Equity futures on the S&P down 57, negative 1.7%. We begin with a big issue. Political tensions in D.C. intensifying.
Political risk rising.
The Supreme Court pick.
Big if and when questions on fiscal stimulus.
A lot of confusion, mixed messages out of Capitol Hill.
Unless we get more support.
There is a requirement for additional fiscal stimulus.
I think the U.S. will go back into recession.
As we head towards November 3rd.
Uncertainty around elections.
The election risk.
Whether this U.S. election will be a clean election.
We may have a contested election.
A contested or litigated one.
That could be pretty disruptive.
A lot depends on policy.
How the shape of fiscal policy evolves.
This is all about fiscal policy.
Whether it's led by Biden or Trump.
Politics is front and center.
Things are likely to become less clear rather than more clear.
Let's head to Washington, D.C. and catch up with Kevin Cirilli, our chief Washington correspondent. Kevin, the focus in D.C., or more importantly for this market, where the focus is not. Walk me through it.
Well, precisely as it relates to the Supreme Court, President Trump saying that he is going to make a swift pick for the Supreme Court. Take a listen to what President Trump said just the other day about the timing of his pick. Here he is.
I think we're going to start the process extremely soon, and we'll have a nominee very soon. I could see most likely it would be a woman. Yeah, I think I can say that. It would be a woman. I would, if somebody were to ask me now, I would say that a woman would be in first place, yes. The choice of a woman, I would say, would certainly be appropriate.
Now, according to sources, the front runner is Judge Amy Coney Barrett. She is a conservative judge. She is also clerked for Justice Scalia. And another name that we're starting to hear is Barbara Lagoa. So two prominent female judges leading the pack in terms of who the president could replace. But it sets up a very contentious battle in Washington, D.C. Democrats are saying that this should not happen, just given the proximity of the election. Republicans saying they were elected to do this, and they have to fill that seat on the bench.
Kevin, equity futures down 58 on the S&P 500. This market concerned about quite a few things down in Washington, but top of the pile, I think, at the moment, the prospect for a fiscal deal. The prospect on a fiscal deal right now, given everything you've just said?
Well, all the oxygen is sucked out of the room because of the Supreme Court nomination process, and that will likely even put even more pressure on the Senate just to really have their floor time, their calendar time, their meeting schedules completely now occupied by the issue of the Supreme Court. However, I would note that prior to the passing of Ruth Bader Ginsburg on Friday, there was some talk that there might be a new push for fiscal stimulus and that there was some progress being made. Whether or not lawmakers can do what they say they always can, walk and chew gum at the same time, I'm not sure, because that clock is ticking down till the end of the month when that budget, which they've agreed upon, but when that continuing resolution would need to pass, and of course the November 3rd elections.
Kevin, great to catch up, as always. In this market right now, the focus on Washington and what's happening in Europe. Let's start with Washington. Cross-asset worldwide. Here's your equity market, 27 minutes out from the opening bell, with equity futures down and down hard on the S&P 500, negative 56, and down by 1.7%. In the bond market, there's your bid, 0.65% on a US 10-year. Yields come in 4 basis points. Dollar yen with a 104 handle. For this market at the moment, for the political concerns around three dimensions. The first issue is the path to fiscal policy, messy. The second issue is the complexion of the Senate and the race for that Senate and the vulnerable Republicans. And the third issue is this messy period that Wall Street was anticipating between November and the end of January. One person who is absolutely brilliant at drawing the line between Washington and Wall Street, Libby Cantrell, PIMCO Head of Public Policy, and she joins us right now. Libby, let's just start on that number one issue for market participants, the path towards a fiscal deal. How complicated is that path now, Libby?
Yeah, I mean, it is gotten very complicated. I think some would say this is sort of the nail in the coffin. Our view had been for the last 3 months that additional fiscal stimulus was really a question of when, not if, simply because of the political downside risk to the economy of going into a re-election, and as you said, a pretty vulnerable re-election for many Republican senators without additional fiscal support. That the sort of hopes for that had faded over the last few weeks as Democrats had insisted on a bigger number, 2.2 trillion. Republicans had sort of maintained a $1 trillion figure. And now, Jonathan, as you point out, I mean, the recent developments around the Supreme Court have just widened that gap from a partisan perspective. And if, Republicans go forward with this, I think there's going to be very little room for, compromise on fiscal stimulus, which, again, was looking like it was already in doubt, before Friday night.
Well, Libby, let's talk about that very little room. From your perspective, is that purely a political issue or a process issue? There just won't be time to try and do both.
Yeah, I think it's both, although I think what Congress always, sort of reaffirms is that, process is really sometimes just an excuse not to do things. But if there really is the will to get something done, there usually are workarounds around process. So it really is the substance of the issue. Jonathan, there's really been actually a framework for the deal for a while, really since the summer. But there are a couple of issues that continue to be the big sources of disagreement. That's around funding for states and cities and the level of unemployment insurance. Those are the big sticking points. They've been the big sticking points for the last 3 months, and they continue to be. Now, interestingly, though, the White House here, especially if this, market continues to decline, you could see President Trump really try to lean even more on Congress to get something done. He's been a little bit, he himself has been more absent from this. Of course, Mark Meadows, his chief of staff, has been leading negotiations. But I think you could see President Trump insert himself. But I think the question is it too little, too late? It may very well be.
Well, Libby, let's talk about Congress. The complexion of Congress after November 3rd. Maybe have to wait a while to have a look at what the White House looks like. But let's start there with Congress and the Senate. I know you've been looking at this. The vulnerable Republican senators, if McConnell and Trump go forward with this, if the majority leader, of course, of the Senate and the president go forward with this, Libby, I just wonder, are those vulnerable Republicans in the Senate even more vulnerable?
Yeah, I mean, I think that's the big question here. And you're right. Now, Republicans before COVID, before the economic downturn, certainly before this, already had a difficult math, as you allude to. Of the 35 seats up for re-election, 23 are being defended by Republicans, and of those 23, really 6 are incredibly vulnerable for Republicans. And they happen to be mostly in battleground states and sort of purplish states. So I think the conventional wisdom, which I think is right, is that this could be forcing a lot of these moderate Republicans like Senator McSally from Arizona or Senator Cory Gardner from Colorado in a pretty difficult spot. Now, on the other hand, you could say this galvanizes the base, this galvanizes Republican turnout. That's potentially the case. But for these folks to actually win those Senate seats, they do need to kind of tack to the center. And I'm not sure lining up behind a Trump nominee right before the election will actually succeed in doing that.
Libby, just one final question from me, if I may. There was already a terrific amount of concern about the period after November 3rd up until the end of January. In the lame duck session, your outlook for that period, Libby, is it a little bit messier now than maybe it was on Friday?
Yeah, that's like a euphemism, Jonathan. Yes, it is a little bit messier. Especially if it sort of depends on when they, Republicans decide and if they have the votes, of course, to bring up the Supreme Court nominee. If they do that, then I think the focus of the lame duck session will be singularly on this. And again, from an economic perspective, very little chance for fiscal stimulus, meaning that we're not going to see, potentially we could not see additional support for the economy until January of 2021. That's another really important point here, is that if this happens, especially before the election, if Republicans bring up the Supreme Court nominee and Democrats sweep Washington, January 2021 is going to be very messy. I think that the expectation for filibuster reform, for potentially adding justices to the Supreme Court, for even more partisanship, if you can believe it, is very likely. And from a markets and an economy perspective, that just adds yet another layer of uncertainty coming from Washington. So I think probably a net negative from a market's perspective should this all come to pass.
If there was a euphemism there, Livy, it was certainly not intended. Livy, it's always great to catch up. Livy Cantrell, send my best to the team over at PIMCO, won't you, please? In the equity market right now, equity futures down 60 on the S&P. We are down by 1.82% on the S&P 500. A little bit of breaking news. Here's Abigail.
John, crossing the tape just moments ago. News on Microsoft. The tech giant is planning to buy ZeniMax for $7.5 billion. ZeniMax owns Bethesda Studios, which is a well-known game publisher. This is to boost Microsoft's Xbox business. It's their most expensive video game purchase ever. Microsoft needs some game titles after the delay of Halo Infinite. And at this point, John, the stock is not reacting all that much off of the lows of the day, but not really on this news. And it is worth noting, as you know, after last week's big tech sell-off, continued tech sell-off, Microsoft now down more than 15% from its recent peak. Not so far from a bear market, potentially.
It is not looking pretty. Abigail, thank you very much. 20 minutes away from the opening bell. Coming up on this programme, COVID cases rising across Europe. The UK considering renewed restrictions. That conversation coming up next with Alpha Omega's Peter Cecchini and Stuart Kaiser of UBS. With futures down 60, we're negative 1.8% of the S&P. This is Bloomberg TV.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
If everybody follows the rules and does the self-isolation, if they need to, follows the rule of 6, which is really simple and clear, and the basics, hands, face and space, then we can avoid further measures. But the alternative to that choice is that we will have to bring in more action. And we don't want to do that, but every single person has a part to play in this.
UK Health Secretary Matt Hancock warning national restrictions could be reimposed unless the recent spike in virus cases is brought under control. The Prime Minister speaking tomorrow. Bloomberg's Guy Johnson joining us now with the latest. Good morning to you, Guy.
Good morning, John. We have taken a turn for the worse here in the UK. The numbers are starting to grow and grow very quickly. In fact, the virus is now said to be doubling every 7 days. We had a briefing earlier on today from Patrick Vallance, the Chief Scientific Officer, and from Chris Whitty, the Chief Medical Officer. They laid out the stark terms under which the UK is now operating, talking about a potential 50,000 cases by October. That has got the politicians on the move. As you say, we're expecting to hear from Boris Johnson tomorrow. There is a Cabinet Office briefing, a COBRA meeting tomorrow. There is expected to flow from that further restrictions. Matt Hancock a little bit earlier on ITV, the television network, talking about the fact that the priority is to keep schools open. The sense he said is that the spread at the moment is coming from social interactions. So I think that is probably where we're going to see the measures being targeted. But John, we are seeing UK assets underperforming once again. Some people are talking about UK assets like Seema Shah at Principal Global Investors being a value trap. We're going to hear from the Governor of the Bank of England as well tomorrow. Mr. Bailey is going to be speaking. Remember, the Bank of England talking very much more about the preparations for negative interest rates. All of this coming together in a tumultuous week for the UK. And as I say, as a result, we are seeing UK assets underperforming, John.
Hey, Guy, great to catch up, as always. I know you and Alex Steele will be picking up the bat on what we're talking about right now in around about 45 minutes' time. Let's talk about this contrast, the compare and contrast between the United States and Europe right now. Equity futures on the S&P are lower. They're negative by around about 1.5%. Even lower right now. But in Europe, we've been down by about 3 percentage points on the European benchmarks all through the morning. The FTSE off by 3%. The DAX, the equity benchmark in Frankfurt, Germany, down by a similar amount. This after we have had people lining up on this program to overweight Europe versus the United States. I can tell you after 3 months of happy talk, that happy talk ends this morning. Joining us now is Peter Giacchini of Alpha Omega for Advisors and UBS's Stuart Kaiser joining us now for more. Stuart, let's just start there. The compare and contrast between Europe and the United States. What does that compare and contrast look like for you this morning?
Hi, good morning, Jonathan. I think from our perspective, really what you've seen since, June or July is a lot of additional risk premium priced into U.S. equity markets, through implied volatility. And, Asia and Europe generally trading a little bit lower. Likely what you're going to see is that rebase itself, as the virus and political risks also kind of grow in Europe. So things should sort of kind of normalize themselves out a bit. Our view has been this rotation into value, which I think would also encompass rotation into Europe, rotation into emerging markets, is a little bit of a head fake, and it's not something you should necessarily chase. We do think it's too early to sustainably rotate into those markets. And I think to your point, this is something that's going to kind of take a little bit of the momentum out of that in the near term.
Peter, does that argument resonate with you?
Yeah, yes, it does.